is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man Al in Homosassa. What's going on, brother?
Isn't it wonderful? I went ahead and invested in your Tiger Dollars, and I went ahead and got the gold report for a year, and also your call letter and stuff like that. And I got over a 50% return in one day, not counting everything else. But I just want to thank you. Tom's not perfect, but he tells you how to put your stops in and keeps your losses small. You can take your small losses, but then all of a sudden you'll be like Babe Ruth and you'll hit a home run. I mean, a big home run. Yeah. And put the money in your pocket.
Okay, brother. You're awesome, man. Thank you.
Now, Tom O'Brien.
Good afternoon, folks. Tommy O'Brien coming to you live from TFNN. Thanks for joining me as we wind down the week coming into America 250, man. 250th birthday, 1776. You got to love it, folks. You got to love it. No matter what you do, be safe out there this weekend, okay? Everyone's going to be having a little fun, going July 4th cookouts, having a few cocktails, having a few nice cold beers at your cookout, and make sure you're safe, folks. Make sure, whether it's you or your friends, right? Don't let them get in the car if they've had too much fun. Life's too beautiful. Don't let it happen. And be careful of those fireworks out there this weekend, too. Okay? And, yeah, we got an hour left, and so much for a calm Thursday, sailing into the July 4th holiday. Where's the patriotism? The patriotic nature. They're selling the market. I kid, folks. But, yeah, we got quite a sell-off, and it's in semis. We kick it off with the S&Ps right now. Down by 0.6%. As you see, we got lows at 2 o'clock. But, boy, some of these moves that you have going on right now, that's a 15-minute. And just from then, we're down 15 points in the last few minutes or so. 74.98. S&P's down by 0.6%. NASDAQ 100. You talk about a run, man. NASDAQ 100 down 900 points from where we were this morning, folks. You're down 2.3%. We were in the green to kick things off. But, yeah, it's the semis. The Dow, we got a bunch of winners in the Dow today, up by 300 points, up 0.6%, 52,960 on the Dow, and the Russell getting pummeled down by 1.4%. It's a jobs Thursday, folks. We'll get over to the jobs data in a moment. Market adds 47,000. The economy adds 57,000 jobs added. Initially, now the unemployment rate dropped to 4.2%. Wage data. Okay, wages, 3.5% year over year. So the market takes that number at 8:30. You get higher price. You get lower yield. Okay, market says, you know what? The economy might be in trouble here, right? We're only adding 57,000 jobs. Maybe we're going to get those cuts. Are they really going to hike when we're only adding 57,000 jobs? There was weakness in leisure and hospitality, even with the World Cup going on. There was weakness in healthcare. Weaker than we have been. I think healthcare was in the 22,000 jobs. Leisure and hospitality and healthcare have been driving all of the job gains recently. So the idea that we're only adding 57,000 jobs, the unemployment rate is at 4.2%, but that has to do with participation. Okay, people are coming out of the workforce because it's a very tough workforce right now because the economy is struggling. So the unemployment rate goes down to 4.2%, but you have a struggling economy when you're only adding 57,000 jobs and people are leaving the workforce, and that's driving down the headline unemployment number yes, that number comes down. Okay? So the idea that we would cut 4.2%, I wanted to be exact. Is it 4.2? I've been saying 4.2. Yeah, 4.2 is what the number comes down to. Unemployment rate's 4.2%. But the idea that they're going to hike, okay, and hikes are priced in, but you see the move. It's a small move. The 10 years at about 4.48 right now, okay? You tick up by, what is this, 6 ticks right now? We are marginally higher. And realistically, though, you're almost pushing lower price, higher yield, right? We have this area down here where you had the extremes of higher yield. during the peak of the war when crude was escalating. But even with crude easing, you got the 10-year at 4.5%, folks. Okay, that is a problem, period. Now, you take that and you go over the dollar, and we got some action in the yen today as well. But that's a move that's going to help gold, folks. That's what you want to see. Okay? You jump over the dollar yen. The yen has been weaker than it's ever been in 40 years. Now, you know, if you're planning on going to Japan, it's not too late, folks. Okay? Go get some yen. Go do it. You're getting 161 yen for every U.S. dollar. But you see the move we have today, and we drill into the 15-minute. How's that for some pullback? So when this goes lower, the yen is strengthening, the dollar's weakening. That is part of the reason that you got the dollar driving lower. Okay? Now that's at 8:30 though, right? Yeah, that's your 8:30 move. Okay? You were already pushing a little bit lower overnight though. All right? Dollar's pushing down 52 pennies, 100.87, and gold catches a bid on dollar weakness. There's your action right at 8:30. Gold pops from 40.80 to 41.50. We're trading right now at 41.27. Gold up by 1.1%. Silver up by about 1%. We hit 62.58. Platinum up by 1.8%. Copper slightly in the red, down by 0.3%. We jump over the VIX. I chuckle because, man, you know, even with, and the VIX is predicated on the S&P, folks. Okay, so you're slightly in the green. We're up by 20 pennies at 16.79. We're up a full point from where we were this morning, which was 15.79. But the problem is not in the S&Ps. Okay, the problem is in the semis right now, folks. All right? Here's your heat map of the S&P 500. There are huge pockets of green here. Consumer staples, the biggest. Walmart, up almost 3%. Coca-Cola, 3%. Procter & Gamble, up 2.6%. Costco, 2.6%. Pepsi, 2.2%. Philip Morris. Colgate, up 2.4%. Okay, financials doing well. Visa, MasterCard. Apple, they love to run to Apple on days when they want to hide. Up almost 5%. Okay, healthcare. Look at this. AbbVie, up 3.5%. Amgen, 3%. Gilead, up 3.4%. Lilly's up 1.6%. Johnson & Johnson up by 3.2%. Now, Tesla's taking it on the chin today, even though they delivered dramatically for the cars they delivered. They're selling that thing off. Meta's off by 4.3%. All right, Caterpillar's an AI stock now. They're down 3.6% right now. Deere & Company off 1.6%. But yeah, let's jump. So then you jump to the NASDAQ 100, okay? SanDisk down 15%. Western Digital 10%. Seagate 11%. Intel 7%. Micron 7%. AMAT's off 10%. Lamb's off 12.5%. And Clack is off 14%. Make sure you're positioned where you want to be in this market, folks. Look at how your portfolio is performing today, because this might be the beginning of a pullback. When you got market leaders trading down $400 from where you were on the open, okay, and that's SanDisk, folks, you were trading at $300 to start the year, and the thing's down $300 today. We'll come right back, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We got the NASDAQ 100 down 700 points. How's that for a give up, for a nice tail, man? Now, volume-wise, we only got 4 trading days this week, right? We're closing out the week right now. Tomorrow, market's closed. You're not going to have a lot of volume on this pullback, all right? You're off by 2.3%. You're off 700 points right now as we almost take back the entire week, right? You have a high for the weekly of 30,600. We were all the way up at almost 30,300 today. We're approaching 1,000 points just today. So, yes, last week, you get the sell-off. We get a bounce. Okay? Watch this. Look at the volume on the bounce. Folks, that bounce was 29,200 to 30,600. That was a 1,400 point, is that right? 273. 1,300, 1,400 point run. These are two of the lightest days out there, right? No conviction on that buying, but you got to bid, and then we resume, and you take it out with selling, and you do it with volume. So these 4 days combined, it's going to be a light volume trading week, all right? But you look at how the week is structured on a shorter term basis. You bounced 1,300 points with light volume, and now you're selling off, and we're going to get some volume in the last 40 minutes. Volume on the close. We jump over the Qs. Yeah, not as pronounced on the Qs. We had a lot of volume at 8:30, and sometimes that'll go into futures. Overnight, you get some volume in futures versus in the ETF structures. Then you jump over the SMHs, though. All right, look at the selling today, man. Okay? This thing's down $40 from the highs. Oh. Look at this. Yeah. 8:30 this morning, you were at 6:30. You're down $45 for the entire semis. Not surprising when, as I mentioned, SanDisk is down $315, and that's where you started the year. And this is where, folks, it's still not too late. Okay? If you're in this thing, pick a price. Don't wait for it to go back down to $500, folks. It was at $27 less than a year ago. Okay? This is, chips are a commodity. Compute is going to become a commodity. Okay? You build it, you can build compute. That's what's going to happen, right? Meta, they're going to be selling compute. Well, guess what? That was a great deal yesterday. Today, not so much. You're down by 4.4%. But the margins, right? Micron, the margins that they came out with, okay? And to look at a stock like Micron, and now look at the fact that you are substantially below their earnings, right? They came into their earnings. Let's put it back. Yeah. Even at 1,011, you were as high as 1,200. You peaked higher following the earnings to 1,200, 1,255. Since then, it's been all negative action. And you are now well below, right? You're almost 5% below where they came into their earnings. Can you imagine if when they launched their earnings, if I had told you, hey, surprise, surprise, within about 6 trading days, right, we're going to be actually 5% lower from where we came into their numbers. I'd say that's got to be insane, man. They're blowing it apart, right? They're blowing away estimates. Their margins are going to be 86%. And they're taking in $50 billion a quarter. I say, yeah, but it's a commodity business. And chips are going to be a commodity, and the margins aren't going to last in perpetual basis. And if they do, competition's going to come in for it. Because it's not an issue where you have like the NVIDIAs, and even NVIDIA's under pressure, but not like these stocks. NVIDIA's off 2.3%, okay? I mean, I've done the scenario before, folks. All right, that's your monthly. Let's put it on a weekly. NVIDIA was chopping around near $40 last August, okay? I'm not cherry picking the low of 27. It was chopping around $40 last August. NVIDIA's got, excuse me, that's not the Qs. SNDK has 148 million shares. So that means you could have bought the whole company, folks, for about $6 billion back here in August. Less than a year ago, you could have bought the entire company for $6 billion. Well, right now, it's $253 billion. Okay? Think about the capital requirements that it would have taken, the book value of a company like that, right, to build out what they have. The whole company was only $6 billion. Now they're $250 billion where they are. And they're going to be under pressure when they're talking about they're not selling more products. They're selling them at a much higher price because there's a shortage. And just like in commodities, people are going to swoop in and they're going to plant the crop, which is in this case building chips, right? Whether it's memory, storage, okay? Chips of everything. And they're going to build it and they're going to plant those warehouses to be able to put them on. And then what's going to happen? You're going to have a much higher supply and that's going to bring down prices. And boy, I mean, what I would make sure I'm doing, okay, is that the winners I've had that are runs like this, if you're in a longer term portfolio, if your portfolio is getting clobbered today, then you have a lot of risk in your portfolio. That's what I want people to address, right? That at least that's okay. You know, you want to be all in on chips and AI and just stay in that sector. You think it's going higher. At least you know the risks you're in. But when you get the semis off the level they are today, you get SanDisk off by 16%, okay, and you have multiples in this market, and you have a rotation. Clear as day. You got Apple up by 5%. Okay, all the great Dow stocks out there. Mickey D's. I'm watching Mickey D's. Now, you're light on the volume on this bounce on McDonald's, but you are going to take out a nice bullish engulfing. And on a shortened trading week, you know, if we had one more day, you might take it out with volume. I'm looking at Mickey D's. This might be the buy on Mickey D's, folks. You know, this is where, okay? I mean, McDonald's is such a great example. Look at this. McDonald's has been in a tremendous uptrend channel, and realistically, it's just on the outside of that, okay? But McDonald's is also trading at prices that we traded at in 2020, 21. Yeah. McDonald's was trading at $2.69 in 2021. We were trading at $2.68 this month, excuse me. So the point being, you're talking about 4.5 years, almost 5 years of stagnant prices at the same time that you've had the NASDAQ 100 double over that period of time. Okay? And it wouldn't be outlandish if you've had the run up in some of these technology stocks if you don't want to take the risk. Now listen, if you're like 25 years old and you're in a retirement account and you want to go all in on, good for you, right? But the volatility over the next few years, it is on full display today, folks. And it's not stopping. Look at this. NASDAQ's down 2.5% right now. It's not stopping, folks. Semi's off more than 6%. And as I talk, SanDisk now down $335 off 16.5%. Whew. You jump over to Tesla. down 8.4%. We jump over to SpaceX shares right now in the positive by 0.8%. Yeah, GDX catches a lift, up by 3%. I don't have a lot of conviction back in that market just yet, though. Yeah, look at that weekly volume, right? You know, we've been talking about it a lot. I like where we are, right at the October strength, okay? Don't get left out of this gold market, folks, would be my encouragement, okay? I wasn't worried about getting left out of this market when we were between 100 and 120, but I'm not going to let this thing get away from me near $80, even if you're between 85 as we catch a bid, as I think that run might be on. Gold, higher, NASDAQ 100 off 724 points. Come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direction's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. ALPS Distributors, Inc.
Welcome back, folks. We got the NASDAQ 100 down 661 points. That's 2.2%. It's the semis, though, folks, down by 5.3%. The equities that have been leading this market higher. right? Look at this quadrant, man. Micron, AMAT, Lam, Clack, Intel, ARM, AMD. And then on the bottom, the memory. SanDisk, Western Digital off 10.3, Seagate 11 point. Here's the thing, folks. These are not normal volatility numbers, right? These should have some red flags that the market is very unsure how to price the future earnings of these companies, or lack of earnings in some cases. And it goes the same way on the way up. But when it's built on that type of uncertainty, it is a high risk, potentially high reward game. But there's nothing saying the SMHs couldn't even pull back to 400 in a heartbeat, folks. And that sounds crazy, but you better believe it's not crazy, man. Okay? You better believe it's not crazy when they were at 162, right, last April, that I'm telling you might come back to test the breakout. Market can move further than you think, faster than you think, always, folks. And it goes the same way. It's so hard to hold equities sometimes when they're running so high, right? I mean, if you're in Caterpillar, how you ever holding this thing for this run, right? And I know many people have, but you've quadrupled in price, right? You run from 273 to 600 to 800. You get a pullback. You said, yeah, we knew the pullback was coming. No, you go higher to 900. You get a pullback. Nah, we're going higher to 1,073. And hey, nothing like the chip stocks, but that's quite a move on Caterpillar, down by 3.7. And it's not like people are getting out of this market, folks. Okay, they're not getting out of this market. There's just a rotation. They're taking the money on the highly speculative stocks that have ran higher for a good year and then some, and they're buying equities that are not as speculative, like Apple up by 4.6%, Walmart up by 2.8% today. Right, Procter & Gamble up by 2.7%. Verizon not participating. They should be participating. What's going on here? No, they sell off. They catch a little bit of a bid, but I thought they would have. For just some dividends, some action, not participating at all. We jump over the S&Ps. Yeah, Visa, MasterCard. You know, if you're looking for places to hide, folks, and you're worried about an AI sell-off, today's a great example of where you are going to see some pockets if the semis start to collapse of where people are going to look to be. Yeah, even software. Right? Look at this. Adobe, Intuit, Palantir, Salesforce up by 2%. And hey, longer term. All right, if you're a believer in the semis longer term, you need a healthy pullback, folks. Okay, we take a look at this run. Even from that run from about 400, the run really began at 360. Yeah, 382 pullback brings you down to this pullback we had here in May. And that's another $35 from where we're, trading at right now. And that's just a healthy pullback in a bull market. Yeah, maybe come back down and test the June 9th lows of 550. That could be your first potential area, but you look at the selling and look at the buying, right? We need some more buyers to run back into this equity because there's plenty of sellers popping up right now. Jump over to Google, down by 0.6% right now. And apologies, folks. Yeah, so Tim Ward, he couldn't make it today. Forgot to mention that one, Rowans. I think he was off a little early for July 4th maybe, but couldn't make it today, and he'll be back on Tuesday, folks. All right, let's take a look at those jobs numbers. So the headline is that hiring slows. 57,000 jobs get added. The unemployment rate drops to 4.2%. But the kicker here, folks, is labor force participation rate plunged. It literally plunged. Check this out. Look at this. This is a monumental number. You're talking about a full percentage point out of the workforce over the last 8 months. Over the last 8 months, it's dropped from 62.5 to 61.5. And yeah, that's going to bring your unemployment rate down. And look at leisure and hospitality. Now, this is the change in leisure and hospitality, down 61,000. I didn't see a number that big earlier. I think that graph might be a little bit off. But yeah, participation rate, man. And then you get so it's the lowest level in 5 years, folks. The participation rate. Lowest level in 5 years, right? And then the prime age participation rate, which goes 25 to 54, lowest level since 2023 at 83.3%. Some economists suggested a sharp decline in both figures could be a statistical quirk. So take it for what it's worth. When you get radical data, you always say, there could be some data problems there. Okay? You don't know. But, yeah. You break down where those are. Average hourly earnings, 3.5% from a year earlier. That's less than inflation right now, folks. So this is Heather Long, chief economist at Navy Federal Credit Union. From the Fed's perspective, the labor market's stable. There's no inflation coming from the job market. But for the rest of America, this is disappointing news. The job opportunities remain limited, and inflation is wiping out all wage gains. Period. End of sentence. End the quote. And I would agree, man. It's amazing. So I'm talking to a friend today, okay, and we're talking about semis in particular. And this friend lives in Massachusetts, also has a home in New York, okay? But he lives in Massachusetts. He works in finance. And so he has a portfolio. One of the ones he has is TSM. And we're just talking about, man, what's going on today, right? Semi's getting clobbered. He's talking about, man, I got other equities in there, right? I got Costco. I got Visa in there. Look at Visa. Look at the run on Visa, man. Up by 2.6% today, right back up to the highs where we started the year at about 360. And what I'm saying to him, and then we're talking about inflation, right? I'm saying, man, this is crazy. Inflation, it's a problem. And with that, I get a call from my lawn guy, great lawn guy, and he tells me that they're going up next month, maybe 10% on all lawn. Now, he should do that. He hasn't went up in years, but not ironic, right? We're coming right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times the daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. ALPS Distributors, Inc.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks, and we got a rotation in markets today. NASDAQ 100 down 2.2%. The Dow up by 0.7% right now. S&Ps negative by 0.5%. Russell off by 1.2. We jump back to metals. Gold up by 1%. 41.25. GDX up by 3.5% right now. And we keep our eye on those semis, man. SanDisk down by 16%. Whew. I mean, how's that for a weekly pullback, right? Now, volume-wise, nothing too remarkable, even on a short trading week. Yeah, let's take a look at Meta. Quite a give back. You gap higher on the news that they're selling compute yesterday, and just like that, we're down by $44 from the highs of yesterday by today, man. Whew. And that is going to be a good thing for Meta longer term. It is. But they're still going to have to spend all that cash, man. Yeah, they got a lot of volume, but it's quite a give back. Quite a give back, down by 4.6%. Check out Caterpillar. Yeah, you got all the volume on the close last week. And where do you find a bid? Maybe in their last earnings? Maybe. Could fill this gap out here. That would bring it to 823. Whew. All right, in this story, as we honor the founding of our country, you got a three-time Olympian getting arrested as a scapegoat for the president's reflecting pool. And folks, you can love some of the stuff the president's doing and still call him out for actions that go against everything our country's founded on. And I have no idea what this guy did to the reflecting pool. But what I do know is that the reflecting pool got handed out to some not random dude, okay, not random at all, who didn't do the job they should have done, okay? And now the president is trying to blame other people for his problems, and he's putting Olympians and charging them with felonies. So, yeah, if this guy's tearing up federal property, of course it's a problem. But the problem is context, folks, and I say it often. Context is so important in everything you do, every negotiation you do, every debate you go into. Context, right? Things out of context. You take something out of context, and it changes it completely. The president is having people arrested, Olympians charged with felonies, to scapegoat him for handing out no-bid contracts that go awry. It's Banana Republic times 10, along with everything else, okay? We all know the grift that's going on. But this one, okay, and I don't know what happened. I haven't seen the video. I didn't vandalize anything. I didn't destroy or break or peel anything. By the time I realized what was going on, I was in handcuffs. This is North Korea nonsense, okay, that the president's locking up Olympians because they're hanging out by the reflecting pool. And who knows, maybe he reached in to peel something, right? He reached into the water to feel a partially detached piece of it, and maybe he's lying, right? Maybe he did reach in there and rip it out. But the context is important, that people are not ruining the reflecting pool. Okay, it was handed out to a no-bid contract that went horribly wrong, and algae's everywhere, and it's not doing very well, and the president's saying it's because everybody's in there, liberals destroying it. Let's hope that people don't have to get put in jail and charged with felonies so the president can go around acting like he's never done anything wrong. It's not the way it's supposed to be, folks. That one, okay? Three-time Olympian. Now, like I say, you don't have to hit everything. Call it like it is. And that's what, let's have adult conversations, okay? That's nonsense, locking up Olympians. Charging them with felonies. That's a felony that guy's getting charged with, okay? Now, the Trump account. Yeah, why not? Now, whether there's grift going on with Dell and all the relationships in crypto, okay, and AI and everything, but good for Dell donating, okay, and as it goes, and yeah, Trump account investments are going to include State Street, BlackRock, Vanguard. And there are many ways that you can set up accounts for your kids, but this is great, totally. And you don't have to be a newborn, okay, that you can get, and that's what Dell did. You can get money afterwards, okay? And Tommy's even eligible. I got to look into it. I think it's $250. Newborns get $1,000. But if you're between, I think, 1 and 6 years old or 1 and 5, you can get $250, okay? And you can contribute to it as well. But if you're going to do that, you should definitely look at other options, whether it's a 529 plan. Okay, there's many other options. So if you're going to actually load up an account for your kids, look at the options. It's never a bad thing. Okay, but there are certain advantages to different types of investment accounts that you can set up for children. But yeah, it's great. So let's see. While there are benefits to the 100% equities investment option, an earlier Vanguard research note pointed out that Trump accounts don't gradually de-risk toward a bond allocation like other account types, such as a 529 college savings plan. Those generally start off with more equity exposure early on and then become more conservative over time as the target date. Hey, if you're starting these for your kids, don't worry about it. Put them in equities, man. Let's put them in equities. Put them in like the S&P 500. Give them a little, maybe the NASDAQ. It's tough when the NASDAQ's so pricey right now, right? But don't worry about it if they're a kid. Do not try and time the market when you got decades of growth, okay? When you're retired and you're going to be using that money for the next 10 or 20 years and you're using it like tomorrow, yeah, you better worry about volatility, okay? You better worry about where you are and the type of risk you're in, okay? If you're in a retirement account, you have a huge portion in semis and you just rode the SMHs, right? That's your daily. Let alone if you go back that you just rode these semis, man, from 77 almost up to 700. Okay? De-risk. Yeah. Diversify. Because markets don't go up forever, they don't go down forever, right? But yeah, great. Trump accounts. Totally. Yeah, Trump locking up Olympians, charging them with felonies, and because they're poking around at the reflecting pool, yeah. And the whole no bid contract, that goes against everything that we're supposed to be doing in government as well. Everything's no bid right now going on. And like we talked about yesterday, there's no such thing as a free gift, folks, as in a free handout, right? Somebody gives you something, they always want something back. Somehow that was like common knowledge before Trump, especially in the second presidency, took over. Qatar just wants to give us a big giant jet because he wants to make the president happy and they want nothing in return. Nonsense, right? Anybody who tells you otherwise, they're not negotiating in good faith. That's all you can say to them, man. Nothing is free. No matter how many times somebody, especially the grift. It's important, folks, as we celebrate the founding of what we're founded on. One more segment. We'll come right back, folks.
trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97, and with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got NASDAQ off 581. And yeah, talking about that long guy. So to bring it back to that, right? And of course, in Florida, folks, I was just joking in the YouTube Tigers Den that the lawn bills are my nemesis, right? As in, when you're in Florida, folks, now the summer, like anywhere, right? You got to mow them weekly, man. Within 2 weeks, it's just massive. But we got to mow them all year long, right? We got, it's not like the winter. You got to do the lawn bills in the winter, in the summer. I got plenty of houses. I have lots. Now, the lots in St. Petersburg, to their credit, and they stay on the lots. They don't let the lots get awry. They write you up. They write you up for a fine. If you don't keep that lot trimmed, you can't be over the sidewalk, etc. They don't want lots, unattended lots, destroying neighborhoods, rightfully so. So, man, those numbers add up dramatically, folks. When you're talking about $150 a month per property, right? 10 houses, you're talking about $1,500 a month. You're talking about almost 20 grand a year, okay? And on top of that, we've been very dry lately, very dry. And so, if you have a well, that's good. But in some areas, the wells are actually dry right now. Yeah, we've been extremely dry. We just started getting rain recently. But to bring it back, so this gentleman that does my lawns, $140 a month. He's doing it weekly in the summer. Okay, and in seasons, like 8 months of the year, I think, 7 months of the year maybe. And out of season, they're doing it twice a week. Okay, that's a lot of mowing. So twice a week in the winter, weekly during the summer months, and it's the same price all year long, $140 a month. That's a great deal. Okay, now I got a deal out in Lakeland that's around $120, but Lakeland's different from Tampa and St. Pete, for sure. And so he's raising it $10 or $15 for the first time in years. And yeah, that's not outlandish, but everything's going up, folks. Everything's going up. All right, folks, have a great 4th of July. 250 years of this great country. And don't let anybody hold you down, folks. America. I love America. All right, go out and celebrate it. Have a great weekend, folks. Safe weekend. Enjoy it. We'll see you back here on Monday, folks. Have a great one, folks.